Price of crude has touched $100 a barrel. That's the benchmark figure that everybody was dreading, but it's happened finally. So what does it mean for India's oil marketing companies and its pure play exploration and refining companies like ONGC? Different sets of impacts, but here's the story.
The headquarters of Indian Oil all dressed up to welcome in the new year. But 2008 didn't quite start on such a good note for India's largest fuel retailer. Crude has touched the historic $100 mark. That means IOC will now see more red on its books for selling fuel products at prices capped by the government. And for now, there's no firm indication on whether or not the government will pass on the burden to consumers by increasing fuel prices.
Then the price hike is not the only solution. There are other solutions also. So we have to see that we get the best solution.
The under-recoveries of oil marketing companies are set to cross 70,000 crore rupees this fiscal. At current crude prices, oil marketing companies are losing 340 crore rupees every day. They lose about 10 rupees per litre on petrol and diesel, 20 rupees per litre on kerosene. And each LPG cylinder is being sold at a loss of 330 rupees.
So the current fortnight, the under-realization in absolute amount is about gross without compensation considerations about 170 crore per day. Of course, a third of it is borne by the upstream companies and 42.7% by the bonds. That's really 24% gap. That's the number now as of now, 170 crore per day.
So while the oil marketing companies are bleeding quite badly, even upstream companies like ONGC that should be raking in huge profits are not being able to take full advantage of this recent spike. That's because higher crude means a higher subsidy burden for ONGC to compensate the oil marketing companies.
Well, personally, I feel the margins for ONGC shall be better despite the higher subsidy burden. The subsidy burden based on a total under-recoveries of about 54,000 crores based on the Indian basket price of about $72, worked out to about 17,000 crores for ONGC. This is rolling high. I feel the overall under-recovery sharing that all will go under change. We feel our subsidy burden is also likely to be higher.
But surprisingly, the market still gave a thumbs up to all oil stocks today on hopes that companies like ONGC will gain from higher margins and a fuel price hike or possible duty cuts will help rescue the marketing companies. The numbers for the oil industry may not change dramatically with crude finally hitting a century, but now that the psychological high of $100 has been reached, it will perhaps be easier for policymakers to now push for a fuel product price hike. But good economics does not always make good politics, and whether or not the government will take a politically sensitive decision of increasing fuel product prices is something that remains to be seen. In New Delhi, Shweta Rajpal, NDTV.